Thanks very much to Ministry of Economy, TSE, Farah Bourse, and the various participating banks and brokers who all worked so hard to pull this together. This is a great idea for a conference. I'm very, very pleased to be part of the first international conference on financing. Let me first give you just a brief background on my own career and why I feel I have anything to say on the subject. I've been involved in international investments in different forms for about 40 years, a little more than 40 years. I started at Mellon Bank in 1980 in the international department. I then was at HSBC in New York, where I set up and ran for a number of years what was the world's first currency money market fund. So basically an interbank currency trading fund for other banks and for institutional investors, something we developed. And after that, I ran a small, what we'd now call a hedge fund. It was just a fund back then, but which did risk arbitrage and private equity investments in the US and the UK. And after that, I ran through all of the 1990s, a firm called Global Proxy Services Corporation, which represented ultimately about $200 billion, which was a lot of money then, of institutional shareholdings in companies in about 53, 54 different countries around the world. And our function was to advise our clients, who are the investors, about stockholders' meetings and corporate governance issues in their investee companies, and then to represent our clients at the stockholders' meetings, either remotely casting the votes or actually sending representatives to the meetings. And we also got involved in a lot of policy, corporate governance policy discussions at the time between specific funds and specific companies, and also between groups of institutional investors and groups of companies or associations of public companies in markets like Japan, for instance, the Keidanren Association, in France, Belgium, the UK, through the Institute of Directors, and so on. So that was very educational in the area of how international institutional investors deal with not only their investments at the portfolio level, but specific investees around the world, and how to manage those relationships for the good of both. Anyway, my current firm, Jexium, is an advisory and institutional investor services firm based in the UK, and our current focus areas are one, a transaction processing platform for asset managers, which handles basically the application of systematic trading strategies or algorithms to portfolios of futures and stocks and different types of assets. And then we're also involved in the creation of a new type of fund and a new type of index product, and also possibly relevant to your market. The first type is a fund which is a thematic fund, coming in different themes, for instance, healthcare, financial services, construction and building, retail, so on, where each fund invests in both liquid stocks and also private equity direct investment opportunities within the sector, within the country or region. And our second focus right now is developing a large set, about 400 or 500 country sectoral indices for listed equities. And so, for instance, Iran financial services, Iran healthcare, Iran retail, Iran construction, materials and natural resources, and so on, listed stocks. And we're doing the same in about 134 other countries. This is something new. There are very few, relatively few emerging market and frontier market indices available on the market now, and even fewer investable products based on those indices. So we're trying to fill that gap with basically a set of country sector small indices, quite granular, which can be used to build portfolios giving regional exposure to a single sector, or bringing together sectors, different sectors from different countries, depending on the portfolio manager's strategy and their asset allocation. And however, in general, the object is to support a greater movement of institutional capital into emerging market and frontier market listed equities, including in Iran. So we'll come back to that. Anyway, with all of that background, and I'm sorry it took so long, I think the most relevant that I'd like to talk about is the basically two questions. One is data, and the other is governance. And they seem at different ends of the spectrum and unrelated, but I believe they're closely related, at least in the activities and the thinking of institutional investors around the world who should be made interested in the Iranian market and opportunities starting to emerge there. So, the timing of this conference, just to come back to the main point, is important, and it's, I think, very good opportunity. We're at the, inshallah, opening of a gateway to a new period in history of greater communication and better cooperation and greater prosperity and relaxation of things which have prevented those from happening in the last several decades, I think. What will the result be? One hopes the result is that markets like yours, TSE and FARA, and also the IME, can do what they do best, better. And that is, an economist would say, well, it's an efficient allocation of capital. I would say it's creation of opportunities for more people in more businesses and creating growth and creating prosperity. So that's really the goal. But as Iran comes back into focus on the world investment stage, you're going to be seen as an emerging market. And that's not a pejorative term. It's an asset class. That's just what investors call countries which are not Western Europe or Japan or Australia or Canada. It's I wouldn't say it's a hierarchical view of the world. In a sense it is, but it's actually got more to do with investment architecture and the plumbing and the wiring of how money moves around the world. Anyway, as you come back onto the stage, Iran will be an emerging market, maybe even a frontier market, but that's not a bad thing. In fact, it's a good thing, I think, because coming in as a new entrant, a return entrant, I think could generate a lot of positive attention. The question is, how do you do it? And so that brings us to let's look at there are two questions: data and governance. Let's look at governance first, just because it's a kind of enabling environment question. So I thought of two other countries that could possibly provide just a structural, an idea, and that's Dubai and Kazakhstan. And you probably know Dubai has the DIFC, Dubai International Financial Center, which is essentially a kind of onshore, offshore jurisdiction with its own arbitration and court and financial markets and regulatory regime in a kind of enclave within the emirate, and that's been very successful in attracting international institutional market participants to the region. Kazakhstan did something similar with Astana International Financial Center, AIFC. It's smaller, it's newer than Dubai. It's based on the model used in Dubai. I'm not recommending it, but it's something that you ought to look at possibly as a kind of regulatory structure which could bring some new participants into the local market by providing a more familiar looking set of regulations and legal system, so on. Just an idea. Then you've got market governance of the exchange and so on. And then you've got, I think, most important to institutional investor is the corporate governance of the actual investee companies. And this is exactly what we did for years with these institutional investors: is look at companies. What are the board? How is the board of directors elected? How many people are on it? Do they have other jobs? Are they executives? Are they non-executives? So on and so on. Not so much the individuals, but the process and the mechanics by which the companies govern themselves in the interest of their owners, of their stockholders. And institutions do look at this. They really do. And for instance, the Institute of Directors in London is a great model. There are many institutes of directors in other countries. Maybe setting up some exchange programs with them in future or as soon as possible would be something good to look at. So after governance, let's look at data. In trying to work up our indices, one of my associates here had occasion to try to get the list of listed stocks from the TSE and a list of brokers. From here, we have good internet connection here. From here, we were unable to log on to the TSE exchange website. It kept timing out. If I'm sympathetic and I push through and I need this data, so we got in touch with the right people to help us, and they did. Thank you. However, if I was an investment manager sitting in California or Toronto or Singapore, and my client had said, gee, I hope we could let's look at Iran. We can add it to our Middle East exposure, and they can't open the website. No, that's not good. So anyway, that's just an anecdote, but I use it as an illustration that if investors cannot find the information about your market and the companies available for investment on your market, or companies or commodities or any financial products, attention span is short. They'll move on to something else. So let's get that sorted out. And then, assuming the connection is there, the channel is clear, data is flowing, what should that data be? Obviously, you have all the exchange data: volume, prices, corporate actions, dividend announcements, metadata on top of that. It's sophisticated. I see that. The TSE is a sophisticated operation, data-wise, systems-wise. It's just got to talk to the rest of the world. And the rest of the world needs to talk to it. Why is data important? Well, I would say one thing that's really going to drive investment inflow into TSE from foreign institutional investors is going to be your inclusion on one or more indices. And let's just look at a broad market index. So MSCI, for instance, among various index publishers, S&P, Dow Jones, Credit Suisse, different firms create and calculate indices. Why are those indices important? Well, they're not just statistics. They lead to and facilitate the creation of investable products. Okay, so if there is no index, if nobody's got an Iran index, And more importantly, if Iran is not a constituent in the broader, let's say Morgan Stanley or MSCI, it's called now, emerging market indices, you're off the radar. So having data flow out of the exchange and to those index producers so that you can be included, I think that's going to make a big difference, because look at it from the institutional investor point of view. They've got an allocation matrix of some sort there in Toronto or Stockholm or wherever they're sitting. And they will have a matrix with, for instance, to make it simple, domestic versus international, equities versus fixed income, listed versus private. And where international meets equities meets listed, that's where TSE and Farabur stocks will be bought in that part of the asset allocation. There's a sub-allocation, and that sub-allocation is going to be to passive portfolio versus active portfolio. Nowadays, of course it varies, but typical big institution will have about 70% of its international assets in indexed passive portfolios, 30% in active, maybe at the max. So let's say $100 million dropped into an international indexed equity portfolio, that's going to go across a couple of different indices. So, and one of them will be, generally speaking, an emerging markets index. And that will in turn be split across all the companies in all the countries which make up that index. And if you're not on the list, they're not going to buy your stock. And then you're hoping, well, some active manager is going to buy it, but then it's a question of research. And I think emerging markets, active managed portfolios in emerging markets are scarce because generally there's a lack of access to research product, lack of comparability of data. Again, another data question. I think, absent other information, the best initiative is going to be towards inclusion in indices and emerging market multi-country indices to make sure at least you're on those essentially shopping lists. So I think I'm about out of time. I'd better just conclude by saying, again, it's a pleasure to be here. Bear in mind, capital flows where its owners are comfortable. And what makes them comfortable? Security, that it's not going to disappear through some political risk. Security that they will have good information at all times about their investment so they can monitor it compared to their other investments, because everything is competitive these days. It's always, do we put money in Iran? Do we put money in Egypt? Do we put money in London Stock Exchange? So on. This money is very fluid. It will be there one day and not the next if it's not bedded down properly. So, but the good thing is, in the current environment, post-virus, high volatility, middle of massive stimulus programs everywhere, interest rates still at very, very low levels. Institutions need yield. They need returns. They've got liabilities to meet on the other side. Pension fund has got thousands or millions of pensioners who need to get their pension every month. And the only way to do that is by generating investment returns. And since those funds have traditionally been long on fixed income, government bonds, and since those yields are so low, they're pushed more towards risk on, and that's got to flow eventually to, as it is, to emerging markets. Flows in and out, but I'm optimistic that with the right groundwork, the Iran markets will become a integral and important part of the international investment world. So thank you very much. Again, I hope to be there in person, but if not, I hope you got something out of this, and thank you very much.